The Australian Financial Review.
Time and time again, ANZ has betrayed the trust of Australians.
The head of Australia's corporate regulator, Joe Longo, made his feelings clear when hitting ANZ with a record fine for misconduct this week.
Time and time again, ANZ has fallen short.
Prime Minister Anthony Albanese also weighed in, calling it a shocker.
Well, it's a shocker, isn't it? And they've been hit with this massive fine, as they should have been.
Leaving new ANZ boss, Nuno Matos, to apologise to customers and the government.
Very tough decision, very tough to the impacted people.
It's just the latest turmoil at the bank, which last week announced thousands of job cuts.
Let's go straight to that breaking news. One of the country's big four banks.
While ANZ's problems are front and centre, other banks are also shedding staff. And there may be more to come.
But look, it's not just a story in the banks, it's a story across the economy. I'll be surprised if we don't see more cost-cutting programs being rolled out over the next few years.
Welcome to The Fin. I'm Lisa Murray. This week, Chanticleer columnist James Thomson and banking reporter Angira Bharadwaj on ANZ's overhaul, why banks are cutting jobs, and whether management has lost control of the message. It's Thursday, September 18. Hi James, hi Angira. Thanks for coming on the podcast.
Thanks for having me.
Thanks for having us.
ANZ has a new chief executive, Nuno Matos, and he's cleaning house. The bank agreed to pay a record fine this week for past misdeeds, and last week Matos announced a major overhaul that will result in thousands of people losing their jobs. James, let's start with the settlement. What have ANZ and ASIC agreed to, and why is ANZ paying this record fine?
Well, ANZ's agreed to pay total penalties of $240 million.
Breaking news, one of the country's big four banks, ANZ, has agreed to pay a record fine, $240 million.
For a bit of a grab bag of problems.
The bank has been lying to the government and ripping off thousands of customers.
65,000 customers were shortchanged.
The main thing they were being investigated for was a scandal in their markets division around their handling of government bond issues. And what they've been found to have done is inaccurately report some of the numbers around those bond issues. They've had to pay $85 million for unconscionable conduct in relation to those bond issues and another $40 million in relation to the inaccurate reporting they were found to have done. And then there's another series of fines for issues in their retail bank. So these are things like not appropriately paying interest on bonus saver accounts, not handling hardship cases in the right way, not handling deceased estates in the right way. So, look, ANZ and ASIC have been clearly happy to find a sort of pragmatic way to bring all these things together and get them settled in one big go. And you can understand why ASIC would want to do that. It means they get a big scalp and the record ever set for penalties paid. You can also understand why ANZ wants to do it, because it allows the new CEO, Nuno Matos, to basically say, this is all behind us now. Now we can focus on my new strategy. We've cleaned the slate. We've reset the relationship with regulators. I get that pragmatism, but I'm sorry, I just can't applaud too much of it. ANZ's told us for a long time that this bond trading issue was nothing major, tried to minimise that for a long time, but it's just shoddy. Your most important customer's always the government. They're the ones who holds ANZ's licence, and they just haven't managed to deal with them in the right way. The issues in the retail bank, that's just sloppiness. We thought this stuff had gone away after the Banking Royal Commission, and yet here we are sort of back in the same territory. So I think, yes, Nuno Matos and the chairman of ANZ, Paul O'Sullivan, have done a pragmatic deal to clean all this stuff up. But let's not forget the issues behind it. I think some pretty shoddy governance lies behind all this.
Angira, the settlement with the corporate regulator came less than a week after ANZ announced it was cutting 3,500 jobs. Why such a big number?
Yeah, so 3,500, that's a big number, and Paul O'Sullivan and Nuno Matos told investors it's one of the biggest restructures of the bank in recent times.
Breaking news, ANZ has announced major job cuts.
Many of them found out this morning while they were at home, making the kids sandwiches for school or on their commute to work.
If you ask the union, it's one of the biggest restructures that we've seen across the industry as well.
Savage job cuts delivered by brand new CEO Nuno Matos, in from Portugal with a three-piece suit and an axe.
But when you look at the number, the total workforce at ANZ, and when you compare it to its more profitable competitors, it starts to make a bit more sense. So ANZ has a total workforce globally of about 43,000, but it's the smallest of the big four lenders. Mm-hmm. So when you look at those numbers, what Matos is doing starts to make a bit more sense. Another thing that's worth looking at is the repeated criticism from a lot of analysts that ANZ basically operates like three retail banks. So you've got the original ANZ Classic with all its customers. Then there was the new experiment, ANZ Plus, which has been riddled with problems, but it's still around. So that has its own workforce. And then they acquired Suncorp Bank last year. So that brings in its own workforce as well. That's three people across three different departments doing the same job. Then there's another 1,000 contractors that have also been cut as part of this sort of mass layoff. Again, when you look at ANZ, it has had a long-running history of contractors embedded into the company for a long period of time. You had EY in there for close to 10 years in the tech department. So he wants to streamline that. He wants to change those numbers and start to simplify the bank a lot.
And ANZ's not the only bank cutting jobs.
No, it's not. NAB probably will say this is not the case, but a lot of people looking from the outside will think that 3,500 job cuts might give the others a bit of cover to cut their workforces as well. So the next day, NAB came out and said 410 jobs were going in its technology department. And they were also moving 127 jobs offshore to India and Vietnam, which is a trend that we've seen among the big four banks as well as Macquarie in recent years. Westpac is also on its way to 1,500 redundancies at least. We expect that number will probably be higher because it's a wide-scale cost-cutting program. They're looking at all the departments. And then Bendigo has also announced some redundancies. They haven't put out a final figure yet. The union places it at about 145 jobs again in the tech department. And then we had Bank of Queensland with 200 cuts a couple of weeks ago as well. So it seems like pretty widespread across the financial services industry at the moment.
So, James, why is this happening? It's not just ANZ. Why are all the banks now looking at reducing their staff numbers?
Well, look, I mean, all the banks have got their individual problems and their different strategies which might necessitate job cuts in different ways. But underlying all this is an industry-wide issue, and it's the sort of almighty dollar. It's become very hard for banks to grow their revenue in a substantial way. While they're still writing plenty of loans across the entire sector, competition is really intense between all the banks, and other smaller banks like Macquarie have come in. And what that's done is push down net interest margins, which is the banking version of profit margins, really low. And then you overlay that, we've got low productivity across the whole economy, which is something we've talked about a lot over the last few years. And you've got steady increases in costs due to that sort of inflationary impulse that we've seen across the entire economy. So banks are really big bureaucracies. So you've got a wage bill that just keeps ticking higher every year. And then, particularly after the Royal Commission, we've seen over the last 5 years or so, the number of people employed in the banks increased by about 20%. So that's been to deal with these issues of non-financial risk and compliance, improving their customer service, trying to win market share. But the issue we've got now is that the banks are pretty bloated, I guess. And so that means that the bank CEOs in this low growth environment need to drive earnings from somewhere. You've also got to remember that the bank's share prices have been rising very strongly. So the bank's index is up about 13% in the last 12 months, which is around twice the level that the broader market has grown. And if you look at ANZ's share price particularly, it's up about 15% in the last 12 months. So with that comes the expectation that these companies are going to produce better profits. Now, that expectation forces management to do things. They can't grow revenue, which means they lean back on cost cutting. And I think that's what we're seeing across the sector.
And you do have 3 new CEOs at the bank, so they all have a mandate for change, I guess.
They have a mandate for change and they all want to show that they understand this cost issue is important to investors. So we've got Nuno Matos at ANZ, got Anthony Miller at Westpac and Andrew Irvine at NAB, and all of those guys are looking to make their mark with a new strategy and that can impress investors.
So it is sector-wide and we are expecting more announcements, but at the moment the spotlight is on ANZ. Angira, tell us about Nuno Matos. What's his background and what is he dealing with at ANZ? How big a turnaround there is required?
So Nuno Matos, 57, born in Lisbon. He's a Portuguese banker. He started out in the Portuguese Central Bank. Then he had a series of senior roles at Santander before heading to HSBC. And that's where he acquired a bit of a reputation as Mr. Fix-It, because HSBC at that time was facing major compliance issues. There were allegations of funding terrorists and drug cartels, and he was brought in to sort of do something similar to what we're seeing now. I mean, obviously ANZ here is not facing issues of that scale, but there are cultural and compliance issues. So it makes sense why Paul O'Sullivan looked to him as somebody that could come and change that here. Crucially also, he did miss out on the top job at HSBC, so I can see why the appeal would be there for him to try and prove himself again at turning a laggard bank around. In terms of why he was brought in, everybody that I've spoken to at ANZ says the culture was very different under Shane Elliott, because he was someone who was there during the Banking Royal Commission. So there was a big focus on regulation, but there was also a bit more of a lax attitude, I guess, culturally. Matos is much more of a traditional banker. He's now come in. We've seen the return of suits and ties, at least on the more executive levels, and he's wanting to bring that traditional banking culture back.
James, the Financial Review had its Asia Summit last week, and Nuno Matos was locked in to speak at that. So you found yourself interviewing him on the very day that he announced these job cuts. What was he like up on stage? How did he handle it?
Well, look, kudos for him for turning up. I think ANZ agreed to do the Asia Summit event a long time ago, perhaps not knowing how much scrutiny Matos' arrival would encourage from inside the bank and outside the bank.
Thanks, Nuno, and thanks for making the AFR's Asia Summit your first public appearance.
Well, thanks, James, and thank you so much for the invitation to be here.
And then, of course, on the morning of that summit, he announced these big job cuts. So he did pretty well to explain it.
Those decisions are very tough to take. You don't want to take them because they're going to impact people, our people, their families.
Emphasised that it was difficult for the people involved and the people's family involved, and wanted to move quickly to reduce the amount of anxiety for them.
It's about avoiding duplication, reducing complexity on one hand, and on the other hand, it's about stopping projects and initiatives that don't align with our priorities.
But by the same token, I think there's a sort of very hard, maybe almost ruthless streak about Matos. You know, he's not here to make friends. He's here to shock ANZ out of what he clearly believes is a bit of a cultural malaise. He wants to change the culture very quickly. He wants to move very quickly with these changes. And he clearly feels that ANZ's being left behind. And if he doesn't go fast, it'll be further left behind. So that is a difficult thing for a big bureaucracy like ANZ to wrap its head around. It was always going to be a sort of tense opening to his tenure, and I think that's what we're seeing at the moment.
And Angira, as James says, Matos is moving fast, and that has created some problems. His big restructure got off to a difficult start. An automated IT email created huge problems for management and, of course, for the staff affected. What happened?
Yeah, look, it was not their finest moment, and it ended up making global headlines, which I'm sure they would have preferred to avoid. So basically, they had announced this restructure of the retail bank, which we canvassed earlier is one of the sort of problem areas for the bank right now. It started with groups 2 and 3, which are internally the bank's people leaders, their more senior staff members. The plan was to announce this retail restructure from Bruce Rush, who is the acting retail bank boss. He used to be the boss of Suncorp Bank previously. And then start to have these conversations through the week with the staff. And then, they'd get this automated email eventually at the end of that process telling them to hand in their laptops. That email got sent before they'd even had a conversation. So there was a group of very senior people who'd been with the bank for long periods of times. I've spoken to people who'd been there for 20, 30 years, and they're being told that they're being let go in an email just telling them where to dump their company loaned laptops. So The bank, to their credit, stopped it straight away. They had a crisis call with Bruce Rush and the head of HR that same day, and they brought forward some of these conversations. But the damage was done. You know, I've spoken to people who were on that call. I've seen some of the messages that were sent to those two staff members on that call, and people were asking, is this a mistake? Like, are you sure we've lost our jobs? So it was a terrible mistake, and I think it kind of set the tone for a lot of people. People are very anxious because if that's the way the most senior people are being let go, I guess there was a sense of, well, what's going to happen to the groups 4 and 5 and 6 who are the more junior staff, you know, who feel like they might be more replaceable. So definitely not the ideal way to start. But everyone I've spoken to at ANZ can acknowledge the fact that change needs to happen. But it's this really fast pace of change that's freaking people out, quite honestly. There's a lot of anxiety about, are they going to be next? So what we're seeing is a lot of this is now culminating in Reddit threads online where people are venting about what's happening. They're leaking internal documents, and we're just seeing this anger and frustration with the leadership and the lack of communication bubble up online.
James, we're talking about ANZ and its plan to cut thousands of workers. It's a major overhaul of the bank, and there are some unhappy staff who are taking to social media platforms like Reddit to make their grievances known. Are the banks and other big corporations losing control of their message with these platforms?
Well, yeah, I think they have lost control to some extent. We have seen these threads on Reddit and social media overseas in terms of big companies. Particularly, they love getting on social media in Silicon Valley, talking about the tech companies. And we've even seen it in the big 4 consulting firms here. So your PwCs, your Deloittes, your EYs, they've seen a bit of this as well. But this is quite unusual, the level of scrutiny we've had on the ANZ Reddits. You're seeing all sorts of stuff in there. Now, there's a weekly thread started every week about Nuno and ANZ where he's referred to as Pappy or El Nuno. There's all sorts of weird claims made about him, that he's swiping the communal chamomile tea. He's waiting at the exits to check who's leaving work early. Now, all of that is just obviously garbage. But it's interesting to see this sort of stuff proliferate on Reddit, and there's places like Blind and Glassdoor and TikTok where there's also stories about what's happening at ANZ. Now, are the big corporates losing control of the message? I think so. To a certain extent. Certainly this is something that's new. They haven't had to deal with these social media platforms in previous cost-cutting rounds. So it's something they'll have to deal with. It's a sort of virtual and very public reframing of the discussions that would usually be happening around water coolers and kitchens inside the big banks and other big companies. But I think it's just going to be a fact of life for these guys now.
I think what's interesting about this Reddit phenomenon is that we have seen it before in tech companies, but when you look at the big 4 banks, I mean, Westpac's doing something very similar, 1,500 cuts across the bank. That's a big number because their workforce is smaller than ANZ anyway. But we're not seeing posts like this on Westpac, and I can only guess, but I think it might be a little bit of a foreign CEO coming. So there's this persona they've, applied to him, whereas Anthony Miller's an Australian, and so they don't pinpoint all his little quirks the way that they do with Matos. And I think the other thing too is we've seen him be quite direct in his leadership style. I mean, we did a story a little while ago that he sent a company-wide email telling people that presentations could be no longer than 5 pages. And so when you're sending it company-wide, straight from the CEO, I think it does allow people to then have an opinion, even people who are lower down the ranks. And that could be really the only reason I can think of why this is such a big deal at ANZ, but not so much at Westpac, for example.
But as you say, ANZ's not the only bank cutting jobs. NAB announced its job cuts last week, the day after ANZ. Westpac's been cutting jobs over the past year, though perhaps more quietly. And both those banks have new CEOs. So is there general upheaval at all of the banks? What's happening at NAB and Westpac, and how does that compare to ANZ?
I think there's definitely an industry-wide shake-up. I think what we've seen is a lot of the Banking Royal Commission era chief executives are starting to leave. I mean, Matt Common's the only one who was around in banking in that time. These other new chief executives are coming in. We had Nuno Matos, obviously, but then Anthony Miller comes from an investment banking background. We've got Andrew Irvine, who's coming from Canada. And they're bringing a different culture because they weren't here for that Banking Royal Commission, or they weren't in these roles then. We're seeing a greater focus on performance. We're seeing a greater focus on results. There's a sense that for too long we've not been focusing on profits. There's also been a sense of COVID's over now. We need to get back to work. We need to get back into the office. We saw that at Westpac. There was obviously the story about the Westpac chief executive even working on Christmas Day. And just so we're clear, he's not expecting every person in the bank to do that. But when you're the chief executive and you're setting that tone, it's a culture change. So I definitely think there is upheaval across the banking sector. I think Westpac and ANZ are probably the most comparable because they both have similar issues of a lot of disintegration in their systems. So for Westpac, for example, they have Bank of SA, Bank of Melbourne, and St. George Bank as well. And all those systems, I mean, St. George was acquired, I think, in 2008, and they still aren't fully integrated. So there's also been upheaval at NAB, but of a bit of a different kind. I think they don't seem to have the same issues as Westpac and ANZ in terms of streamlining, but there have definitely been issues in terms of the leadership of Andrew Irvine. So we reported previously in June that some investors had raised concerns directly with the chairman about Irvine's management style, particularly around his socialising and drinking with clients. So again, it's a similar thing, right? I think there's been a certain style of leadership at the banks for a long time, and that has changed, whether that is because you've got Matos and Miller coming in and bringing in that hustle culture, or is it because you've got someone like Irvine who's got a bit of a different style of leadership that seems to, not be sitting well with all the investors?
And James, the bank we haven't talked about yet is the Commonwealth Bank. They seem to be a little bit ring-fenced from these problems, but earlier this year, they did get into some trouble after they were forced to backtrack on some AI-related redundancies. Generally, they've been free from disruption. Do you expect it will stay that way?
Oh, look, this stuff tends to go in cycles, and so CBA's time will come, I'm sure. I mean, their biggest problem's been their runaway share price, which has just surged over the last couple of years to make the bank the most valuable or the most highly valued bank in the world. And certainly in Australian history. So that's been their issue. Again, the share price has surged. How do we drive growth? We haven't seen them do a lot of cost-cutting, as you said, although they did have this sort of weird slip-up in July. They said they'd make 45 roles in customer call centres redundant because they had a new AI agent that had been introduced and could take some of that work away. But then, within a couple of weeks, they had to do this embarrassing backtrack because the amount of work involved had actually increased and the roles went redundant after all. And so that was a real mess. As a result, we haven't seen any of the other bank cuts at ANZ, NAB or Bendigo Bank or Bank of Queensland linked to AI specifically. And so I think for the moment, at least, the banks are going to be very careful about saying, yeah, this job is going because AI is here.
So finally, to both of you, is this just the start of the job cuts in the banking sector? I mean, you've just mentioned AI. That's something that will become increasingly important in the future. You've talked about the banks as being sprawling bureaucracies. So is there more to come? And if the very profitable Big Four banks are struggling, what does this say about the broader economy?
To answer your question, I do think there will be more cuts. With the exception of CBA, all the other three big banks have their results coming out later this year. And I wouldn't be surprised if Westpac, for example, comes out with a bigger number than 1,500. Like James mentioned, there are a lot of cost pressures, and then there's the emerging technologies like AI. So a lot of these back office jobs, I can see them going down the track. Might not be immediately, but it certainly is going to be something that happens over the next few years. We've also seen banks like CBA and Macquarie invest very heavily in AI. We had a story not long ago about Macquarie having a partnership with an AI firm that would create AI workers to replace back office HR and payroll jobs, for example. And I wouldn't be surprised if something like that works out for one of the banks, if others would soon follow suit as well.
Lisa, the banks need to work really hard just to stand still. In CBA's full year results for 2025, their operating expenses were up 6%. So just keeping expense growth at that level will require them to work really hard, the other banks have got exactly the same problem. So we're not really talking about reducing expenses here. We're just talking about keeping a lid on expense growth. That's how hard you have to work in an inflationary world to do that. But look, it's not just a story in the banks, it's a story across the economy. I'll be surprised if we don't see more cost-cutting programs being rolled out over the next few years. But remember, that doesn't have to be big bang stuff where 100 jobs go or 1,000 jobs go or however many jobs go. We're actually seeing some really awful numbers around graduate hiring coming out of the US, and that shows you can bring your staff numbers down by just not replacing workers who leave or who retire and using AI or other technologies more efficiently. So the banks certainly have their own specific issues, but the jobs market is in for a huge change over the next decade.
Thanks, James. Thanks, Angira.
Thanks for having me.
Thanks for having us.
Thank you for listening to The Fin. I'm Lisa Murray, with Chanticleer columnist James Thomson and banking and financial services reporter Angira Bharadwaj joining the podcast this week. The Fin is produced by Alex Gow and Mandy Coolin. Fiona Buffini is head of premium content. Our theme is by Alex Gow. If you like the show and want to hear more, follow us wherever you get your podcasts and consider rating and reviewing us as it helps others find us. For more stories about markets, business and power, subscribe to The Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.